Hello friends, today I am going to tell you about Tata Motors passenger vehicles. Regarding the research report, Tata Motors passenger vehicles was demerged from Tata Motors Limited in October 2025. It currently operates across three segments: electric mobility, through the TPEM, PV subsidiary; global luxury, via Jaguar Land Rover, or JLR, and the passenger vehicles segment, including SUVs. Essentially, it functions as a dedicated passenger vehicle entity. Today, we will examine its research report. If you are an investor, this video is relevant to you, so please watch it in its entirety. Watch the full video, and if you like it, be sure to hit the like button and subscribe. They are now aggressively executing their electric vehicle, EV, strategy. If we set aside the roadblocks faced by Jaguar Land Rover, it is the third largest player in the passenger vehicle segment. Tata Motors holds nearly a 40% market share in the Indian EV passenger vehicle segment. Its market capitalization stands at approximately 1.18 lakh rupees crore. Though it has faced certain hurdles, such as a cyber attack, tariffs in China, and the inherent challenge of high vehicle costs. If it can overcome these obstacles, the stock offers significant potential in the market. If you are already invested, holding the stock is a good option. You could gradually accumulate more shares if the price dips to lower levels. The company was originally incorporated in September 1945 as Telco and was later listed as Tata Motors. In October 2025, it underwent a demerger to form Tata Motors Passenger Vehicles, which trades on the NSE under the ticker symbol TMPV. Its MD and CEO is Shailesh Chandra, and it operates under the parent Tata Group conglomerate. The company is headquartered in Mumbai, Maharashtra. Its chairman is N. Chandrasekaran, who is set to step down, and the CFO is P. Balaji. It employs approximately 37,000 people, based on 2026 data. Its operations span passenger vehicles and electric vehicles. Notably, Jaguar Land Rover is part of the group, and Tata Technologies drives the company's technical innovations. It operates on three key engines. The first comprises internal combustion engines, ICE, and CNG. The second focuses on electric vehicles, and the third involves JLR. Domestic demand for CNG and hybrid engines models like the Nexon, Punch, Tiago, Tigor, Altroz, and Harrier dominates the market. In the electric vehicle space, the Tiago EV, Punch EV, and Nexon EV are performing very well. Regarding Jaguar Land Rover, JLR, it is the company's largest single revenue contributor. However, the segment has faced challenges: cyber attacks and pressures from luxury taxes in China, impacting performance. If production normalizes, it is expected to deliver strong results in FY27. In the passenger vehicle industry, the competition for the runner-up spot is a close race between Mahindra and Tata Motors. While Maruti Suzuki is definitely at the top, you can see a graphical representation here comparing the two. The blue line represents Tata Motors passenger vehicles, and the orange line represents Mahindra. This chart depicts wholesale volumes, specifically, the unit sales figures, illustrating just how tight the competition is between them. When comparing Mahindra with Tata Motors in terms of unit sales, specifically the number of vehicles sold, we see that TMPV has achieved a 46% year-on-year volume growth. Now, let's look at the competition chart for the electric vehicle, EV, segment. You can see how the passenger vehicle segment compares. Tata Motors holds the top spot, though its share has dipped slightly. Meanwhile, Mahindra and MG Motor have seen significant growth, rising by 172% respectively. These three players continue to dominate the market, collectively commanding a total share of approximately 87%. In the Tata Motors EV segment, it remains the market leader for the full 2026 fiscal year, with a 39.2% dip. However, the graph shows a dip in its market share. In contrast, Mahindra's SUV driven by the rapid growth resulting from the launch of models like the XEV9 and B6 launches. Turning to its financial performance of TMPV, revenue has declined by 8.3%, and EBITDA margins have contracted, impacted by JLR costs related to a cyber incident and luxury taxes in China. However, the boom in India's EV passenger vehicle market is evident, with rapid expansion underway and the benefit of operating leverage coming into play. Looking at the details for the segment, revenue stood at 58,500 crore rupees, marking a 21% year-on-year growth. While realizations remained flat, the EBITDA margin expanded by 50 basis points year-on-year, and unit sales volume surged by 37% to 201,800 units. Regarding the market valuation and snapshot, the stock is trading at 320 rupees, and its 52-week trading range is between 294 rupees and 448 rupees. In terms of valuation multiples, the stock is trading close to its book value. Additionally, the company offers a dividend yield of around 8%. As for the average 12-month target price, estimates range from approximately 371 rupees to 400 rupees. I have taken a conservative figure of 371 rupees. While with Cell City have a previous target was 305 rupees, CLSA has issued an outperform rating with a very aggressive target of 452 rupees. Since these are prominent firms, and you can use this information to gauge the stock's potential. Company's strategic roadmap, key elements include an aggressive EV plan involving an investment of 18,000 crore rupees in the launch of over 5 new EV models by FY30. Another objective is to defend its leadership in the EV segment, aiming to maintain a 50% market share, a position it currently dominates. Thirdly, the company is focusing on growth in the passenger vehicle (PV) segment, targeting an 18 to 20% share of the total Indian PV market by FY30. Given its current share of 14 to 16%, this is a manageable target, though it faces direct competition from Hyundai and Maruti Suzuki. Finally, the fourth point concerns stabilizing and recovering the JLR business during FY27 and FY30. Let's discuss the SWOT analysis, strengths, weaknesses, opportunities, and threats. Regarding strengths, the company possesses a strong brand name and benefits from the backing of the Tata Group. As for weaknesses, earnings are currently dependent on JLR, and market share is eroding due to competition from rivals, particularly in the electric vehicle (EV) segment. Opportunities lie in the potential for increased EV penetration, specifically within the passenger vehicle segment, and the likelihood of a cyclical recovery for JLR. Threats include aggressive competition from Mahindra and JSWMG, challenges arising from tariff changes and policy uncertainty, and risks related to cybersecurity and operational continuity. Let us now discuss the key risks facing the company. Regarding market dynamics, the vehicle launch needs to be competitively priced given the intensifying competition. Tariff structures and demand fluctuations are also areas of concern. Any adverse changes here could disproportionately impact the company. There are margin risks as well, driven by the aggressive pricing strategies of competitors like Mahindra and MG, which include models like battery as a service and innovative financing options. Regulatory shifts and changes in emission norms or subsidy structures, along with import-export tariffs, pose further challenges. Finally, there are operational and climate-related risks. The company must avoid plant disruptions, such as the incident that occurred in 2026, to ensure smooth operations. Regarding engagement with Tata Motors passenger vehicles, investors should look to accumulate on dips and hold the stock, buying when prices are favorable. It is important to track JLR's margin recovery and monitor the stability of PV, passenger vehicle, sales throughout the quarter, as these are both backbones of the company. For business partners, selective engagement is recommended, whether in the EV supply chain or through JLR-linked programs. Prospective customers should always verify details and buy with confidence, given the strength and brand value of Tata Motors. To sum up, the company is currently in a transitional phase. Under JLR's influence, it is moving in the right direction, so there are no major concerns. Tata Motors' passenger vehicle division holds a very strong position in the market. JLR is bound to recover, as the current issues are temporary, and it remains a key revenue driver. Investors should consider holding the stock for the medium to long term, as the company is poised to be a credible growth partner. Furthermore, Tata Motors is highly regarded within the domestic automotive supply chain, particularly for its focus on safety, presenting a strong outlook. If you have watched this far, please don't forget to like and subscribe. Since the channel is new, do let me know in the comments what you thought of the video. Your encouragement gives me the confidence and motivation to deliver even better content.